This is going to be brutal. In this video, I'll explain why Bitcoin is set to rise in the coming days. We have sellers trapped in Bitcoin ETFs, whales buying the recent surge, while retail is selling into it, and XRP whales have finally stopped dumping. On top of that, crypto liquidity could explode thanks to the $2,000 checks Donald Trump wants to hand out to 85% of US citizens. And with the Genius Act, the goal is for the stablecoin market to grow from $310.7 million to $3 trillion in just 5 years. Let's break it all down. The US economy seems to be at a breaking point where political, monetary, and technological decisions are interwoven in ways that could redefine the country's financial future. It all started with an announcement that caught markets off guard. President Donald Trump proposed a $2,000 dividend for most American citizens, financed by revenue from import tariffs. In theory, that money would come from foreign companies that sell products in the United States, although the measure is still with the Supreme Court, which must decide whether those tariffs are legal. The prospect of millions of Americans getting an extra check triggered an immediate market reaction. Even if many traders think the proposal won't pass, the mere rumor of a potential liquidity injection has already raised expectations. More money circulating means more spending, more investment, and, as we saw during the pandemic, more flows into cryptocurrencies like Bitcoin. In fact, analysts estimate that up to 85% of US adults could receive that payment, and if a slice of them decides to put it into digital assets, crypto demand could spike and push prices higher. But it's not all rosy. Economists warn that a stimulus like this, without productive backing, can fuel inflation and add to public debt, weakening the dollar. That's precisely why many Bitcoin advocates see an opportunity here. When traditional money loses value, investors seek refuge in assets with limited supply, and that flow into the crypto ecosystem could be amplified by another phenomenon: the growth of stablecoins, cryptocurrencies designed to hold a one-to-one value with the dollar. According to Federal Reserve Governor Stephen Moran, the boom in these tokens is putting downward pressure on interest rates. That's because issuers typically back them with treasury bonds. This steady stream of capital keeps yields low and, in turn, supports an environment of cheap credit and abundant liquidity. Today, the stablecoin market sits around $310 billion, but the Fed estimates it could multiply to $3 trillion over the next 5 years. A leap of that size would mean a massive flow of digital dollars moving through the crypto ecosystem, reinforcing its role in the global economy. At the same time, the new Genius Act aims to give stablecoins a solid regulatory framework, requiring every token to be fully backed by safe assets like treasuries, something that could attract major institutional investors. In parallel, veteran investor Ray Dalio has sounded the alarm. By cutting rates and easing credit during a period of economic growth, the Federal Reserve may be inflating a new bubble. Dalio argues these policies are usually reserved for crises, not strong expansions. In his view, the US is entering the late stage of a cycle marked by heavy indebtedness and a growing reliance on money creation. That excess liquidity can lift markets in the short term, but it also weakens the dollar and stokes inflation, again favoring safe haven assets like gold or Bitcoin. If the Fed keeps injecting money into the system, it's likely some of that capital will seek higher returns in cryptocurrencies, strengthening their role as an alternative within the financial system. And while all this unfolds, politics is once again center stage. The US government shutdown has already surpassed 38 days. The Senate is preparing to vote on a bill that could temporarily reopen federal operations, but the lack of agreement between Republicans and Democrats keeps everything frozen. The shutdown doesn't just affect thousands of public employees. It also weighs on the crypto regulation debate. The bill known as the Clarity Act, alongside the Responsible Financial Innovation Act, aims to establish a clear framework for crypto in the US. However, both initiatives are on hold while the country tries to solve its budget impasse. Reopening the government is key to resuming these discussions and restoring the release of macroeconomic data that investors need to gauge where the economy is headed. For now, Senator Cynthia Lummis had anticipated that the text would go through Senate committees in the fall and could become law in 2026, but the prolonged shutdown and the closeness of the holidays cast doubt on that timeline. So between a potential national dividend, the rise of stablecoins, expansive monetary policy, and the government shutdown, the US financial scenario is moving in a delicate balance. More liquidity, more risk, and above all, a growing presence of the crypto ecosystem in the global economic conversation. Now let's analyze the inflows and outflows of Bitcoin ETFs. Look at how since October 29th, we already had 6 consecutive days with selling, with outflows in Bitcoin ETFs. And now we see how on November 6th, the situation changed and we saw strong inflows into Bitcoin ETFs. Basically, there was buying. Now look at November 7th. Look what happened. In a single day, $558 million were pulled out of Bitcoin ETFs. Obviously, if the price had continued falling after that day, that would be alarming. But what is the reality? Bitcoin, after November 7th, did not continue collapsing. It did the opposite. It started to rise. So what should we think about those $558 million of outflows from Bitcoin ETFs? Are we going to go to the simplistic view and say, well, since they are ETFs, the only thing happening is buying or selling? Or is that the sentiment of the institutions? Of course, it's not the sentiment of the institutions. This is a false belief that has slowly become true in the collective mind of the investor because it has been repeated so much. So what are we evaluating at Crypto Insight? What we are evaluating is that this massive sell-off of November 7th in Bitcoin ETFs is actually trapped shorts. Investors who panicked, who capitulated, who sold aggressively, and who are now trapped down there. And for you to better understand what I just told you, right now you're looking at the Bitcoin chart on the 1-hour time frame. As I was saying, those sales of November 7th, I don't know about you, but in my opinion, those sales look completely out of place. Think about it. That sale that exceeds $500 million in ETF outflows didn't really go anywhere. The price did the complete opposite. So ask yourself, who was selling? Was it the institutional investor via ETFs, or was it the retail investor via ETFs? The top indicator measures the spread, the delta between whale buying and retail buying. If we look at this Bitcoin chart, we can see institutions were already buying. They started accumulating right after that attack we analyzed in the last video, when we expected a second push lower. Honestly, we expected it with a trap, but in any case, we anticipated one more bearish attack before moving up. And look how that whole idea we laid out has been confirmed over time. A steady, bullish trend of institutional buying. With this indicator, we can also isolate what retail is doing. Are they buying or selling? And what do we see here? We clearly see a downtrend. Not only that, if we zoom into the very short term, notice how whales are rotating and buying like absolute maniacs, while misinformed retail is trying to sell into Bitcoin's recent rise. On November 7th, we saw massive outflows from Bitcoin ETFs, and far from the price falling after that, it did the opposite. It went up. So we can assume there are roughly $500 million of poorly placed shorts that are bleeding, taking pain. At the same time, it's institutional wallets that are driving the move higher, while retail keeps getting it wrong and is selling the rally. If we pair this with the XRP whale flow, we can see something else. Basically, this indicator tells us whether flows into wallets belonging to XRP whales are positive and how positive, or negative and how negative. In plain words, when the histogram is green, XRP whales are buying. When it's red, they're selling. That's simple. Just look at this accumulation phase. In blue, you have price, and you can see whales were buying like crazy. And unsurprisingly, price started to climb dramatically. Later, whales began distributing. They do it patiently, but they were distributing there because price was likely to drop, which is exactly what happened. Then whales started accumulating again. Here, whales accumulated. You can even spot the creak of the accumulation process at a glance. Then came the black swan, and right there is when they stopped buying. Notice, This isn't a coincidence. Price rises, hits their target, they take profit, and what do they do next? They start selling. We've been in a phase where XRP whales have been selling for quite a while. But what's happening right now? What's happening is that whales have just stopped selling, presumably to start buying. And now it's time to analyze what could happen next with the price of Bitcoin and the broader crypto market. I'll break that down for you in a second. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
As I explained in previous videos, remember we placed a lot of weight on this black swan, which led us to take a bearish stance. That's exactly what played out. In fact, we expected the drop into this defense zone, this rectangle. Once price hit it and we saw a small bounce, in the next video, we told you we expected another leg down. We needed one more drop, ideally as a fake out a bit lower, before starting to move up. And we also said we didn't know what the catalyst would be, the news excuse to make it happen. But at Crypto Insight, we were already analyzing how big institutions were setting the stage, as we showed in the last video. So, we're at a key inflection point. Question: is it time to turn decisively higher? One scenario says it's possible, but if you ask me, they might still scorch retail a bit more. Right now, many traders are terrified. They wouldn't touch Bitcoin with a 10-foot pole. They wouldn't try to buy it. But as I said when price was higher, they can still scare retail a little more. I think the market still owes us one more push down. Price can make noise here, give us a trap on top of the trap, before eventually resuming its bullish path. That said, if you look at spot, we're currently in a long-term investment window. Facts are facts, because we don't know if we'll get that extra fake out, or if price will just head higher from here. Either way, we're at very reasonable extreme market conditions. Seeing this Bitcoin move up is key, but we also had a major tell to anticipate the drop before the rise. We had a near-perfect catalyst to sense when Bitcoin and crypto would pop, and that catalyst was SUI. Remember, we put a lot of emphasis on this token because, essentially, as soon as we got the breakout of the wedge, here's the wedge you're seeing, and here's the bullish breakout, things were set to move. This would signal that the immediate drops are over, and that the broader crypto upswing is being confirmed. Look at how we explained it in the last video. And because SUI is a very important proxy to understand what the market might be doing, check out the superstructure I'm showing on screen. Now let's zoom in. In earlier videos, I showed you an upward impulse here. This is its W. This is its weak Y. And all of this forms a Z as a wedge, one that will eventually break down. Basically, SUI is giving you, totally free of charge, a roadmap to gauge how much longer cryptocurrencies could keep falling. So as long as SUI stays inside this wedge, stays in that Z drifting lower and lower, it means we're not ready to move up. But the moment you see SUI break the wedge decisively to the upside, something like this, that likely means the crypto market can begin its bullish path. As you can see, understanding what's happening with SUI has been crucial, and grasping this style of analysis isn't quick or easy. I'd even say it's not obvious. It's taken me years of study and dedication to read the behavior of large institutions in financial markets, and there's no better place to learn how we analyze live and how we hunt for trading opportunities in real time.
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, means you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
So, what can we expect from Bitcoin and the crypto market? We can expect Bitcoin and altcoins to continue rising. Notice how Bitcoin came to collide with a relevant macro structure, where a bullish accumulation process has been playing out. We also have evidence that ETF traders are trapped short in that area. Ethereum ran a fake out below its defense zone, built an accumulation base, and is now reclaiming key structures. We see XRP piercing the advanced guideline, one of the structures we wanted to see break in the previous video, and it's now probing a macro structure breakout. A clean break of that macro structure would simply project bullish continuation in its price. With BNB, it's much the same story. We've been discussing an impulse, a channel, a range, and the climactic action that slammed into a key defense zone. Zoom in, and you can see an accumulation process that has been productive, and that also encourages a positive view on BNB. On Solana's 4-hour time frame, it's a good sign that price reacted at the defense zone you're seeing, and just recently it pierced a creek, as you can see now. It's an accumulation process that wants to push higher. Not to mention Link's trap. Look at this anchor, this defense area, and how price respected it. Here, it faked below it, and if we zoom into the trap zone, notice how an accumulation phase forms, then breaks the creek with strong aggression. After that, it comes back to test the origin of the breakout, and then it flies. That takeoff could be confirming this whole structure as a macro structural trap. If that's the case, Chainlink, just like the rest of crypto, is likely to keep rising. And with SUI, honestly, the only thing we can do is say thank you. In the last video, I told you it was giving us a very generous early warning about when crypto wanted to move higher. That's exactly what SUI did. It warned us ahead of time. We just had to follow it, listen to it, and act accordingly. Now tell me, have you been tracking SUI's chart? Are you positioned long? What do you think about the market? Drop your view in the comments. And if you enjoyed this advanced technical analysis, hit like on the video, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Best of luck with your trading, and I'll see you inside Crypto Insight Premium. See you next time.